All right, good morning, everybody. Good morning, good morning. So happy January, happy 2022. Hope you all had a good New Year's Eve. Hopefully none of you are too hungover, and hopefully you're all ready to kick some big time ass this year. So we'll get jumping in, and we'll start here with the S&P 500, and she sits pretty here. She sits pretty. So in terms of top to bottom structure, bullish weekly squeeze here for the S&P futures, which as of this morning officially fires to the upside. Inside of the weekly squeeze, you got the big bad 3-day here, and then of course you have the daily squeeze, which is already fired to the upside. So I think weekly chart down to a daily chart, you got good trend, structure, momentum, and then last week being the last, the last week of the year, you kind of get some of that low volume back and forth crap, but the structure is good here, guys. So you kind of look at your AEMA as support, and then under the surface, your S&P is printing a 4-hour, a 2-hour, and a 60-minute squeeze. So heading into today's session, heading into the rest of the week here, in terms of trying to nail the next move, I think you dial it down to that 1 hour, and you see if that can fire to the upside. Obviously, that fires long. That could trigger the 2-hour, could trigger the 4-hour, could get a pretty good party going to the upside. And of course, vice versa. Hourly squeeze fires short, could bring it back in towards a 21 EMA. But structure is good here, so until something changes, and remember, as always, nothing changes based on news. It changes based on price action and structure. Until something changes, I'm looking for higher highs here. All right, next up is the Qs. Good morning, Qsters. So we'll start here with the weekly chart, and it's a beauty. Right, so the end of the world a few weeks ago, I think it was just a pullback to weekly support. So great structure here, positively stacked EMAs, green 10x bars, and then you've got the 3-day, beautiful 3-day squeeze, and then you got your daily here, and kind of like the S&P. You get that big push into early last week, then you get the low volume crap, but you hold support here at your 8 EMA, and you got a 4-hour, 2-hour, 60-minute squeeze. So same thought process. Dial it down to an hourly chart. If the hourly squeeze fires long, you're probably going to start that path back towards those highs. If it fires short, then you got a little bit of downside here. But good structure, in my book, it's as bullish as it gets. And we'll check the Dowski here. Even the Dow looks pretty good. So weekly, 3-day, daily, 4-hour, 2-hour, 60-minute squeeze here for the Dow. So pretty much the same. Big push, little bit of chop, but you can dial it down to your 4-hour, your 2-hour, your 1-hour. Look how solid the 4-hour squeeze is. So I think we have bullish weekly charts, we got bullish daily charts, and now we have the benefit of a couple squeezes under the surface that could serve as a pretty good gauge. So the Dow checks out, the S&P checks out, the Qsters check out, and then you got the small caps here. So no real edge, in my opinion, to trying to get long or short the small caps. You don't have any stacked DMAs. Momentum's a little bit wacky here, but it does do a pretty good job of trying to shift momentum in terms of the daily histogram. So you got your positive histogram, you got your daily squeeze, and you're back above the 21. So maybe the small caps make a nice push here. I'm not going to trade it, but I think if the small caps can just, at the very least, continue to trade above the 21, well, then I think your S&P, your Qs, your Dow, I think they got a much better shot at progressing into higher highs here in the absence of the ugliness over here for the small caps. So in terms of the indexes, guys, I think they're shaping up here. You got your VIX chilling like a villain. So just again, to kind of reinforce everything here, until something changes with structure. So I don't care what CNBC is saying. I don't care what Kramer is saying. Quite frankly, I don't really think the market, at least at this point, cares about the Omicron. Just tune all that shit out. Focus on the chart in front of you. Until something changes here, I think the path of least resistance is to the upside, all right? But don't have biases. So don't go into, January here and marry the idea that just because we currently have a good weekly structure, good daily structure, it doesn't mean we have to trade into new highs. So what I'm trying to say is, a week from now, your S&P, your QQQ, we roll over and we're trading under the weekly 21 EMA. Now I'm probably going to pump the brakes on trying to get long and maybe consider getting short. But as a lot of you know, I ain't short in the market on any pullback if we're above the weekly 21 EMA. So when and if that changes, I'll probably be the first one to come in here and say, hey, let's try to short this bad boy. But for now, I think the path of least resistance is upwards. So let's take a look here at a few good-looking sectors. Pretty much the same cast of characters here. So your SMH, I think, looks super, super solid. Weekly and daily stacked EMAs, weekly and daily green 10x bars. So there's trend, there's momentum, and you got a great-looking daily squeeze. Let's see, there's a 2-hour, a 15-minute. All right. But a great-looking daily squeeze here. So, the key for me in 2022 is focusing on the structure and nothing else. So, right, early December, you get some volatility in the market, a little bit of nastiness, but at no point here do the small caps lose structure, or the semis rather. At no point do they lose structure, and every single day I'm getting a buy signal. So my thinking is if the market trades higher, something that's given you buy signals for a month, probably going to be one of the first spots to trade into the upside. So SMH looks good here. And what's pretty interesting is, at least as of right now, they're kind of picking and choosing their favorites. So Micron is obviously beast mode. And I don't think I want to chase it up here. Broadcom is beast mode. Total savage. Then there's ON. It's a pretty good push there. There's LRCX, for example. So a good, 4, 5, 6 plus of these, good looking semiconductor stocks, they've already kind of made the push. So what I would focus on here, and hey, if you get a dip in your Micron, if you get a dip in Broadcom, then I think we look to buy it. But in the interim here, I'm probably going to fancy AMD because you have the same structure, trend, and momentum, but you're also trading back here at the 21 EMA. So it's sitting pretty in the buy zone, where Broadcom basically already made the move. So I think AMD is interesting. NVIDIA could be interesting as well. Can we get a couple closes back above the 21? Then maybe we'll come back and talk here. But I do think Qualcomm is a beauty. Weekly, daily stacked EMAs, weekly, daily green 10x bars, daily 2-hour, 30-minute, 15-minute squeeze. Most importantly, though, she's trading at the 21, not up here at 2 to 3 AR. So as long as SMH has a good structure, I'll look for dips in Broadcom, Micron, a few other spots here. But as of right now, as far as a new entry, I like Qualcomm and I like AMD. And we already got a little bit of AMD over here. So that pretty much covers it for the semis. And quite frankly, guys, if you want to simplify it, and that might be my next move, you could just trade the SMH. Actually, hold that thought. We're going to open up around maybe 312 this morning. Put it this way, the closer to the 21 EMA, the better. But your semis look good here. And then next up is your tech. You could look at tech in the form of XLK. You could look at QQQ. I think you got a good structure here. So until something changes, or unless something changes, I'm looking for the Qs to be trading at brand new all-time highs over the next 2 to 3 weeks here. So where does the opportunity lie in tech? You could just grab QQQ. Nothing wrong with that. But we all know Apple's been the big dog, right? Big man on campus here. Quite frankly, there's a really good entry. Back at your daily 21, there's a good entry. There's your best entry, I think, inside the daily squeeze. It's not crazy extended at this point. I like Google a little bit better. I'll show you why I like Google a little bit more here. But I do think Apple's got good structure. It's kind of a mirror image of the QQQ in terms of you push hard into Monday and you spend Tuesday through Friday kind of chopping above your 8. But if we dial it down here, Apple does have a pretty solid 2-hour squeeze. And keep in mind, you got that 183 level where Apple becomes the first $3 trillion company. So I do think you could get a shorter term pop here in Apple. But in terms of, where can we get that that 30, 40, 50 day till expiration core swing position. I think for that kind of trade, the ship has sailed here for Apple. You should have been doing that back here. But if you take a look at Google, one of my favorite setups heading into the new year, daily squeeze, but most importantly, we're not up here at 2 to 3 ATR. We're right here at the buy zone. But that daily squeeze, that has pretty good structure. It's nested inside of what I think is the picture perfect 3-day. So the 3-day to me is just like, it's not going to get any better. Stacked DMAs, you got the green 10X bars, and of course that 3-day squeeze is nested inside of pretty good looking weekly. So Google has tough spreads, really, really wide bid in the ask. So they can be a little bit funky. For me, the easy trade here, scale down in position size. Maybe you do an out the money debit spread for February, March expiration. Maybe you do an in the money put credit spread. I think what you want to do here is give Google plenty of time, but try to structure a trade low risk, high reward. Where if 30, 40, 50 days from now, Google's trading above 3,000, you got a hell of a return on your hands. But from another perspective, Google comes down and breaks that weekly 21 around 2,800. You want to make sure it's a small loss. So I think you scale down the position size because of the nasty spreads. Try to work something like an out the money debit spread and in the money credit spread. But however you go about it, it's a great structure. So very similar to Apple, right? Because Apple's basically poster child right now for the kinds of moves that we can see unfold when a big triple squeeze fires. So back in early November, Apple's got that daily, the weekly, the 3-day, the 4-hour, the 2-hour, the 1-hour. She's squeezing everywhere. So it doesn't mean Google has to make a similar move, but it is the structure. So I like Google here. Microsoft, that's actually, oh boy, that's another good looking one. Like I hate the entry right there. To me, that's a sucker's entry, right? Because everybody out there running the breakout scan, everybody doing, high level technical analysis is looking for the breakout above resistance. I don't want to buy it here. I want to buy it back here to 21. That way, by the time we push into resistance, if we can actually break out, I get to ring the register. Versus you trying to get long up here at 345, you're sitting through dips, all kinds of crap. So good structure to Microsoft. Next up is Facebook. Quite frankly here, guys, Facebook's got a little bit of work left to do. I don't have my stacked DMAs on either the weekly or the daily, which for me kind of makes it untradeable. For what it's worth, though, I do think Facebook is a work in progress. If you look at the weekly chart here, you can call last week your first close back above the weekly 21. You've got a shift in momentum here. The daily chart does shape up a little bit better. So I kind of look at it as a work in progress. Just be a little bit careful, though. And of course, Google, or Facebook rather, it could explode. So it's going to do whatever it wants to do. But when you look at a weekly squeeze like this, you're trying to string together a couple closes back above the 21. Momentum is shifting, but not quite positive just yet. And you don't have your stacked DMAs. So Google, I keep going back to Google. Facebook, it could potentially spend a month just weekly squeezing, chopping back and forth. Whereas, Google here, okay, there's a positive histogram. There's very clear support above the 21. There's stacked DMAs. There's green 10X bars. I would bank on something like a Google here with that kind of structure to fire a little bit sooner than something like a Facebook. And keep in mind, both Google and Facebook, they're the top two holdings here for XLC. And I don't think the communications is the best looking market out there. So if we're going to pick between the two of them, I think you got to go with King Google. All right. So we took a look at Apple. We took a look at Google, Microsoft, Facebook. And then you got this big boy right here, Amazon. And I don't know how many of you watched yesterday's video. Probably Wednesday or Thursday. I'll get a video out recapping, my 2021 performance. A few interesting stats though. So across all my, I got 2 or 3 accounts that I work. Across my 2 or 3 accounts, I think I profited $70-ish thousand last year, trading credit spreads on the Amazon weekly squeeze, which makes for a good video title, but quite frankly, kind of kind of ridiculous. Uh, there's an easier way to go about it, is what I'm trying to say. So, this kind of leads me to my next discussion here. A huge goal of mine this year is opening up my opportunity set to names outside of Amazon and Google and Apple and Tesla. And those are my favorites. They're definitely my favorites. It's what I came up on. But in terms of, my style of trading, I'm never trading Amazon because of Amazon, the company, or Amazon, the stock. I'll trade Amazon because of the structure, because of the setup. So in terms of more opportunity this year, working on new scans, working on buy signals. But to me, something like a Ford, I can't disregard this. Right? It might not be my quote unquote favorite, but the buy signals are trying to tell me something. It's like, hey, bozo, pay attention. I've got trend, I got structure, I got momentum, got everything you're looking for. So I think Ford, you got potential here to trade back into 2150. You get a position there in the options room. And another name, kind of off the beaten path, is Dollar Tree. But I love Amazon. Right? I love to trade Google, the big FANG stocks, the big semis. Dollar Tree is kind of superior to a lot of the big FANGs right now. Picture perfect. Buy signals, stacked EMAs, green 10x bars. Another example here is Qualcomm. And that kind of falls into the big semi world, so I like it. But do you guys get where I'm coming from? What I try to preach and what I try to work in my own game plan is it's all about the setup. So what the hell am I doing last year? And don't get me wrong, I'm not complaining. And it's a different discussion in terms of, hey, you can find a weekly squeeze. You can sell put credit spreads. And guess what? When it works like Apple, you're taking home some quick profits. When it just continues to squeeze itself to death like Amazon, you might come out on top. It's a different style of trading, right? You need patience, you need discipline. So in terms of, is there an easier way for me to make that $70,000-$80,000 rather than just sitting through Amazon chop? I think there is. So as I go through the scan results, Qualcomm fits the bill, Ford fits the bill. Marvel Technology, I'd like a little bit of a dip there, but good structure. Zebra, one of you from Twitter tweeted at me and said, hey, check out Zebra. Good call out because this is perfect and you're getting buy signals. There's Dollar Tree, there is Pure Storage, there's BJ's, Slab, MP, SAFM, Flow. So if you're in the mastery or you're in the options room, this is what I'm trying to bring to the table for us this year. So we'll trade Apple, believe me, when Apple's given us a buy signal. Otherwise, I think we'll go with Dollar Tree. I think we'll go with Ford. I think we'll go with the freaking Zebra here until we're getting buy signals on some of the quote unquote favorites. All right. But guys, that's what I got for you this morning. To me, the indexes here, mainly your S&P, your QQQ, your Dow, bullish structure. And none of that changes, even if we dip to the 21 EMA here. So just try to see the bigger picture versus kind of living and breathing every tick. I think you'll enjoy trading a lot more. But that's what I got for you here. In terms of open positions, I've got Amazon, I've got some AMD, some QQQ, I've got some Apple, I got some Ford, some Dollar Tree. In the options room, we got some Roblox, and bad boy better get its ass back above the 21. And then for those of you that joined us last Friday for the tax loss trading, John took like 80 positions. I ended up taking one over here in Zoom. Looking for a little pushback towards 200. But that's what I got for you. We'll see if anything changes here. But until something changes, that's a game plan I'm trying to work. And it's a game plan that served me well last year. But let me see what y'all got for questions. I got to jump in the options room in about 10 to 15 minutes. And then we'll get going. Jill, you got Paycom? Paycom on a monthly chart. What you got here, Jill? Okay. Very interesting. Now, obviously, if your monthly chart's going to pull back from 2.5 ATR to the 21 EMA, well, then every time frame underneath it is going to get tossed around. It's very much like your QQQ pulls back to the weekly 21. Everybody freaks the hell out. But your weekly chart can't pull back without your daily chart at least getting thrown around a little bit. So in terms of Paycom, that daily chart, of course, does not look all that bullish, right? Like that doesn't look appealing. Quite frankly, the weekly chart doesn't look appealing, but that's kind of what has to happen to get the reversion to the mean on your big time frame. Now, Jill, I think in a perfect world, Paycom just kind of chops here for a few weeks. You build a better weekly chart, you build a better daily chart, and then we try to work an entry. However, what you could do, start to scale into a position and have your stop on a close under, 385. Have your stop on a close under the weekly 21. Just keep in mind, though, your daily chart might continue to be a little bit sloppy. So I think you give the trade plenty of time, if anything. But I like your call out here because a lot of times your weekly chart is as bullish as possible, right? And that little pullback to the weekly 21, well, it has your 4-hour chart looking like the end of the world. So that's pretty much Paycom right now. Great monthly trend, but the weekly, the daily, they kind of get beat up in the process, right? Jason, I think Nucor is let's see. I think it's pretty sharp. Yeah. Yeah. Jason, check this out. Good call out. Weekly, 3-day, daily, 4-hour, 2-hour, 60-minute, 30-minute, 15-minute, 5-minute squeeze. You can't squeeze any more than that. So good structure to the weekly, good structure to the 3-day, good structure to the daily. Momentum's all a bit neutral, but nothing wrong with that. Good stuff, Jason. One thing we all got to keep in mind, though, especially me, earnings. So you got earnings in a few weeks here, January 27th. That gives you a decent runway, though. Easy stuff here, Jason. You could take it down as far as a 15-minute squeeze. See which way this fires. In terms of probabilities, if this fires long, that might go on ahead here and trigger the 30-minute squeeze. That might go on ahead and trigger the 1-hour, the 2-hour. Next thing you know, your daily chart's getting it popping. So great call out there from Nucor. Hey, good morning, Miss Angela. Let's take a look at a few of these. Microsoft is rock solid. QQQ rolls over, down goes Microsoft. But you got good structure there. So if the Qs do rally into a brand new all-time high, I would think Microsoft is very much the same. But good structure. You pull back to your 21. So I think this is the easier entry. Versus trying to chase it up here when the calls are expensive, you're at resistance, the puts have already gotten crushed. Now I think you can work a better entry with a better risk reward. So Microsoft is very solid. Let's check out Nike. Angela, a lot of squeezes here for Nike. Weekly, 3-day, daily, few lower time frame squeezes. But if you look at the daily chart here, pretty good shift in momentum. So negative histogram. Histogram improves, positive histogram. Good structure for Nike. And what I like here is with your triple squeeze, weekly, 3-day, daily, you get a pretty clear target back up here at the previous highs. Maybe you don't have to take it into the highs, but you got a good target there. So I think Nike looks pretty good. And then Angela, in terms of Chevron, this is interesting because I don't love the chart of energy. 10x bars are all neutral. No stacked DMAs. You can't quite get back above the 21. So structurally, it's not my favorite sector. However, Chevron actually looks rock solid here, along with a few other names in energy. So I think what you do in this instance is you could trade Chevron because it is a great setup. It's got a good structure. Just scale down the position size a little bit. Right? just kind of take into consideration that energy isn't necessarily the most bullish looking thing out there. Maybe you don't make it a max position size trade. Maybe you cut it in half. Maybe you risk a quarter. But in terms of Chevron on its own, very solid. Yeah, and then Angie, I think in terms of an iron condor on TXN, I like the idea. I like that idea mainly because you're trapped in a weekly squeeze here with no real signs of momentum to get you out of this thing. 10x bars are neutral. There's no stacked EMAs. Your 3-day chart, it's not the best looking. The daily chart is a little bit uneventful. So I do think TXN, pretty good candidate here for an iron condor. Good question here, Phil, in terms of NUE. It could, right? It could be an issue. I think what you want to look at in this instance is, at least for me, right? I'm always going to look for a move from the 21 EMA into about 2 or so average true range. So I think the key is to kind of look at the last, 2 to 3 months of price action, and then just kind of figure out, is the stock capable of doing that quickly? Of course, when you have a good structure. So great looking daily squeeze back here, in low beta to your point, but in a couple of days, it gets up to your target. Comes back to the 21, a couple of days later at the target, brand new daily squeeze at the target, brand new daily squeeze at the target. So good observation. But I do think you have enough structure here and enough trend. I don't know if I would try to take it back into the all-time highs, but I do think you could get a nice push into 120, 123. It's got a good setup for sure. Hey, good morning, John. So in terms of Google, what I would do here is ignore it every time frame. Well, here's what I would do. Because for me, the real focus here would be the weekly squeeze. So anytime there's, 3 or 4 squeezes setting up, my mindset is I'm going to focus on the biggest one available. And that's where I'm going to make entry decisions. That's where I'm going to make exit decisions. So in terms of your Google squeeze here, I would actually like to see Google trading a little bit lower, because then you can pick up a position a little bit closer to the weekly 21 EMA. But that's the importance of focus on this time frame, because your 2-hour squeeze could fire short. And all that really does, I think, is give you a better entry here on your weekly chart. Right? So again, very, very similar to, you go back a few weeks ago, in every lower time frame, squeeze on the QQQ is firing short. If you're a swing trader, I think there's a lot to like there. Potentially that 30-minute, that 1 hour, that 2-hour squeeze firing short, it might just give you the best entry inside your weekly squeeze. So kind of look at Google from that perspective. Right? A lot could happen on the hourly chart, the daily chart, etc. But if all it does is take you into the 21 EMA, I think in terms of trying to trade the weekly squeeze, just offers a better entry. So I would actually look at the 2-hour squeeze and say, hey, can you come in a little bit more here? Right? Can you lend me a hand and give me a better entry? So I wouldn't too much be afraid of Google firing a 2-hour squeeze short. I would more so say, hey, I might get a better entry here. And I think we're going to open up around 2,900 this morning, so relatively flat. But a great question, John. So I really think the key is, what's the time frame you want to focus on? So from another perspective, say I'm looking for a shorter term trade, maybe 4 to 5 days, kind of looking for a quick flip. Okay, well, now I'm probably going to be a little bit patient. So for conversation's sake, say the 2-hour squeeze is your focus here. Well, very much to your point then, John, histogram's negative. It's firing short. We don't have stacked EMAs. Yeah. I'd wait for that to shape up a little bit more if I'm looking for a shorter term trade. If I'm trying to scale into a bigger position for the weekly squeeze, then I would actually like to see the 2-hour squeeze fire short. Good question. All right, guys, a few more here. I got to jump into the options room. Tom's got ZS. Take a look here. Good stuff. Yep, good stuff. So it all gets a little bit sloppy. But you're back above the 21. You got stacked DMAs. Histogram has started to shift. So you're basically coiling up here at your launching pad. For that 21 EMA, that's going to be the launching pad. Very much like back here. So now what we can do is, all right, we got the rocket on the launching pad. Can we go find a 2-hour squeeze? Well, if that 2-hour squeeze can fire long, the rocket might be taking liftoff. If the hourly squeeze can fire long, so on and so on. We traded this a few months ago. Where did we trade this? I think it was back here. Good structure though, Tom. Good structure. At the launching pad. But all right, guys, I got to go heat up a coffee. I got to jump in the options room here in a few minutes. But I hope y'all have a great day. I'll be live again Wednesday morning for pre-market prep. And I got a few videos coming your way this week outside of our regularly scheduled videos. So I'll hit you with a 2021 recap, look at account statements, all that good stuff. Then a few more things here in the works. But as always, guys, I appreciate you spending a good 30, 40 minutes of me here this morning. Best of luck today for those of you in the options room. I'll see you in a few minutes. Talk to y'all soon.